All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm really excited to bring on my colleague over at Forex Analytics, Steve Vulgaris, and I'm totally mutilated Steve's name, and he's going to correct me here momentarily, I'm sure. Let me see if I can find him really quick. Let's see, and I'd like to welcome everybody. Steve, we'll just call him Vulgi for short. Everybody welcome Steve. Steve, can you hear me this morning?
Hey, Blake.
Hey, good morning. How are you?
Good morning to everybody.
I'm doing well. Well, it's good afternoon for you in Athens.
Good afternoon to Europeans. That's what I want to say. Yes, exactly.
Yeah. How are you today?
I'm good. Quite busy actually. I had a few meetings in a row, so I had to rush the last one to be here on time. Yesterday I thought I'd comfortably make it, but as it seems, one was delayed, the other one took a little bit longer, so I had to cut the last one short. But here I am, and happy to be here as always, of course.
Glad to have you here. And for those of you that don't know who Steve is, this is here. Let's. I just pulled up Steve on Twitter. Now, and just so everybody knows, that's a Alfa Romeo. Is that the new 4C? The thing?
Yes, yes, it is.
Okay. Hey, you know what? I actually saw my very first one driving down the road just 3 days ago.
Extremely nice car and very, very, very entertaining to drive. It's equivalent to the Lotus Elise. Lotus Elise and Lotus Exceeds. It's the same kind of logic, like very low weight and extremely, extremely good steering. And since it's very light, it accelerates and brakes, in dead time, so it's it's a car for actual car lovers to drive.
Yeah,
I mean, it's not a car to take to go to the market.
Right. It's like it looks like the size of a Porsche Boxster. It's pretty or something like that.
Perhaps even a little bit smaller. Yes.
Yeah. Yes. Hey, real quick, Steve. I've got to take a moment. Just give me like about 30 seconds, but this will be a great opportunity. Maybe you can explain to folks who you are and what you do, and while you're doing that, you just got to give me about 15 seconds. I just need to open the door really quick, so to my office. So yeah, tell everybody a little bit about yourself.
Yes. Some of you already know me. I've been here before. I'm obviously Greek. You can call me Steve because the actual name is not easy for plenty of foreigners. I've studied both finance and management. I had a bachelor in each. Doing some master's degree in finance as well, and I've been into trading since almost 10 years ago. I started just playing football bets as a university student, and then I realized that, the basis for risk reward and my studies actually pointed me to doing the same, but for the markets, since I anyhow had the background knowledge. I transferred to that. I had an uncle of mine which was a quite famous trader, so he got me into the game, and I never left since.
That's all. And that's where you get it, is from your uncle.
Yeah, he actually introduced me to the world of trading, because initially my first degree my first bachelor was in management, so I knew I wanted to to study something that had to do with economics, etc. I actually started while doing management, my management bachelor. I started being in love with economics itself, so I did a lot of courses on economics, and I would have probably gone for an economics major afterwards as well, but since I had already started trading, I did my second one in finance, and of course never regretted it. I mean, economics is always something I like to be involved with, and nobody can stop you, even if my majors are not exactly in economics. I've done a lot of them, obviously. So yeah, the good part that knowledge on economics brings is the influence it has brought to my life. Is that as a trader, I mean, is that I'm always looking to do a top-down analysis. I mean, I always start from the macro and then go down to to a weekly chart, to a daily chart, and usually stick to that. I'm not a short-term trader, as Blake can testify to that. I don't
Yeah.
like trading intraday. I like to see big patterns. It has a lot less anxiety as well. So I prefer to find a position in advance, to plan a trade, and then stick with it if needed, even for weeks, occasionally for months as well. And personally, I know that everybody, I'm sure all of you have already found your own way of trading, but everybody has something that makes him or her feel more comfortable, and that's what makes me feel more comfortable. The fact that in the long term, usually markets usually do what they're supposed to do if your idea is backed by fundamentals, and if actually you also have the technical trigger, you'll find out that your percentage of winning trades can be quite high. Statistically speaking, if you're trying to chase one trade after the other, obviously your percentage of winning trades is going to go down. So if you're trying to do it by the bulk, then obviously you're trying to make an incremental profit on average per trade. This is not my style. I have nothing against it, but it's not my style.
Well, and I can attest to that. I mean, I've known you now for several years. I actually met Steve in person when I was in Greece 3 years ago, and went out to dinner with him and his wife, and was and by the way, I rode in his Alfa Romeo, which is a different model that they don't sell here in the United States, and that thing's quick, man. That thing was fast. Just so you know, Steve has a really cool little Alfa Romeo. But I met you then, and what I've learned about you over the years is, and you've been a guest here on the Morning Edge, talking about, especially through the Greek bailout situations, and we've had you on as a special guest over those periods. I've learned that you are a longer-term, macro type of trader. Now, Steve, just to give you guys a little bit of background about us, we partnered up with several other traders to develop Forex Analytics. So he's one of my colleagues over there, and that's where you'll see a lot of Steve's analysis is daily in Forex Analytics. Now, Steve, you had said today that you have some ideas, because we only have 20 minutes left before Chip gets here.
I can see that.
Yeah.
Me, how do I share my screen?
Oh, I'll give it to you. But you had a few ideas, and in this summertime environment, it's a really slow market. So we're all about getting ideas from you. So, and by the way, Luca with a C says Malaka Steve. And Nitish says, hey, Steve, thanks for being here. And Robin from India said, automobile webinar, I like it, man. anyway, Steve, I'm going to pass it over to you so we can actually see, and you can share with us some of the ideas that you might have.
Sure.
And it's coming over. You'll see the screen coming over to you right now.
Okay. Let me see.
And I'll tell you what screen I see once you.
That was my question, actually.
I see your looks like the Reuters platform.
Okay, no problem. We can stay here, and I'll bring I can bring trading view here. It's okay. It's fine.
Okay.
So everybody can see it, right?
Yep.
Good. Okay, let's start by the very, very basics. Okay. This is DXY. As you'll notice, the situation with DXY is, and no surprise there, similar with the situation we have in Euro. Two similar broad ranges. That's why I don't like to trade either of those at the moment, at least not directly, because there are a lot of people I see every day. People, of course, they're trading intraday, etc. Like short Euro USD, long Euro USD, etc. Yes, okay. What I can tell you as a fact is the following: that Euro USD is going through its longest period that it hasn't registered a 52-week low or high. We are in a very broad range, and we're actually doing nothing at the moment. If you want to take it to the short term, I can tell you as a fact that we broke out of a descending channel and currently testing a previously ascending channel channel support as a resistance. So, if I, with a pistol in my head, I would say that, short term, a short here might work, but in general, I'm not touching this thing, and I'm not touching the DXY as well. DXY, though, for sure, this is some kind of a consolidation, a huge consolidation. We got rejected from the 61.8 of the previous move lower, which made a false break. Usually, as Blake will tell you as well, false breaks usually are an indicator that things might move on the other side. So somebody would say that this huge hammer here, actually it was even a bullish engulfing actually, this bullish engulfing day is still being respected because we're still in a broad ascending channel. So still, if you had to ask me if I would be short or long here, I would tell you we're closer to the bottom of the range. We're still expecting this false break and the bullish engulfing we had.
That was a big false breakdown too. I mean, that caught a lot of people off guard,
yes.
Right?
Definitely, huge, and yes, it got a lot of people short, and this rapid move afterwards higher, I'm sure it was at least partly fueled by, stepping over stop losses of people that thought, okay, this is it, it's going lower, it's going to correct further. Guys, always please keep the big picture in mind. This was a huge move up in the USD, huge move up, and obviously after very broad moves, the least we can do is consolidate, if not correct. Any kind of instrument, any kind of ticker can correct either in moving against the impulsive move by correcting in distance or by correcting in time. Obviously, what we're doing here is a little bit of both. What troubles me is that this has started being, very prolonged in a sense. I mean, I don't know. I'm not a fan of the USD at the moment, but I have no case to make being short currently where we are. There's no case to be made for risk reward. I mean, of course, sometimes intuition, your instinct, or whatever you believe, might be enough of a trigger. I totally respect that. So that's starting with the basics. But I have a couple of things I want to show. One of them is this. Three things actually I want to show. One of them is this. This is Euro Pound. Let's have a look at the big picture once more. There is also a blog post, Stelios and I have written about it, both from the macro and the technical perspective. We'll find a way to publish it because the blog is not ready yet. It's going to be within a few days.
And Stelios is one of our other colleagues at Forex Analytics, for those of you that don't know who Steve's referencing.
Yes, and I'm sure they'll soon have him as guest at some point as well. He's a very, very interesting person and a great person to hang around with.
Yes.
That's on a personal note. So what do we see here? Euro Pound. We were in a huge descending channel that lasted. Actually, this is another comment I want to make for our friends. Not accidentally, when did this thing top? I think it was 23rd of December 2008. There's this conversation I've been having with Blake, very often, having to do with the importance of seasonality. You will notice that very, very often you find tops and bottoms at the beginning of a week, or at the beginning of a month, or at the beginning of a year, way more frequently than simple statistics would dictate. For example, let's say finding a top or a bottom within the first, let's say, 5 days should happen only 5 out of 365 times. Because, it's 5 days out of the 365 days of the year. But you will notice that not coincidentally, that happens way more often. So I pay attention to those things. So anyhow, we broke out of the channel decisively. This looks clearly as an impulsive move. We had a conversation with Greg, our other colleague, yesterday, because I'm into Elliott Wave as well, but it's his specialty. So we have a 1, 2, 3, 4, and then an extended fifth 1, 2, 3, 4, 5, which seems to have topped. Of course, we always wait for evidence, where this move equals this move. This is also the 61.8 of the whole descent, and the fifth wave of the extended fifth equals the first wave of the extended fifth. Does that mean that we actually topped? And we also had a dark cloud cover yesterday. Okay, so we have like, and RSI divergence. So we have like 5 different evidence saying that this might have topped. Don't ever lose your focus from the basic fact that this is an uptrend, a very strong uptrend. So even if you identify 5 different reasons why this could have topped, that doesn't mean that it actually did so. It means that the chances of this being a top are extremely increased than if you chose a random point in an uptrend and said, oh, I'm going to be short here because I think this thing has moved too much. This thing has moved too much, either to the to going higher or going lower, is a kind of thought that has run a lot of people bankrupt. So you never go against the trend without strong evidence, and when you do so, obviously you need to have a very tight risk reward. So this is one of those cases, for me at least. Let's move to another pair that I like, and I've been monitoring for a long time. This is GBP Vulgi. Okay, more or less the same situation here. We have a channel, this time this is an ascending channel. We have a move that could be corrective, because as you see, we're still higher than we began the uptrend. You can classify this move as a 3-wave move. A, B, C. C is 5-legged. And the same applies to this one. We have some targets, not as perfect as with the pound USD as the cable. We have RSI divergence. Obviously, we are seriously oversold in the long term. And if we had Stelios here, he would explain into detail why we both think that the whole situation with pound is a little bit overblown. I mean, yes, Brexit is obviously going to cost something to the British economy. There is no question about it. There is a lot of uncertainty involved as well. So usually, as we say in economics, being in an opaque environment as it is now, and uncertainty is always brings a premium. So yes, obviously there is pressure to the cable, but we shouldn't forget that the cable has already dropped like 15%. The BOE has already eased without yet having any serious evidence that the economy is actually already underperforming. And the 15% devaluation of the pound is on itself a very strong easing measure for obvious reasons. I mean, it's basic economics. So we think that plus the new Prime Minister, Theresa May, belongs to the Remain camp. Of course, she has said that people voted Brexit and Brexit is going to happen. But politicians, there is always the potential for that to change somehow using another, let's say, referendum or whatever. I don't think it's going to be a referendum, but perhaps it's going to be a new election cycle. Perhaps they'll say that, okay, let's go to elections, and if you vote for us, keep in mind we want to remain, or they'll find another way. There are various scenarios available. They've already more or less said that they're not going to opt for Article 20 this year, which means
50.
that they're going to do
Article 50.
Yeah. Sorry, and they're going to do it next year. That also requires another 2 years to for its deadline to kick in, which means that until then, who knows? I mean, the UK economy is doing better than other economies. I can tell you that as a fact. And in general, if you told me if I would be buying or selling the pound at the moment, I would personally be buying it. Technically speaking, if we move closer, we obviously had a bullish engulfing yesterday. There is a continuation today. Currently, we're testing the low from here. I'm definitely a buyer. I'm just sharing the setup. You can judge on your own what you're going to do. Anyhow, everybody takes the decisions on their own. Let's see something else. Aussie USD. Okay, this is Aussie. Things are very clear. Huge downtrend, following commodities cycle, blah, 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 etc. At some point, after taking millions of people bankrupt trying to short it because they were reading all about how expensive it is, and the McDonald's index and the Big Mac index and a billion different indexes telling them that, oh, it should be a lot lower, etc., etc., etc. But, you know, that doesn't happen just because you want it. It happens when, you know, other things come in play, like China started weakening, commodities started weakening, and since Australia is a country that is based on exporting iron ore in a big percentage, like 20-something%, etc., 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 obviously the Aussie followed lower. What we see is that it's channeled quite a lot of times, and currently we're testing a very big level, and we seem to be constantly failing on penetrating above it. Just look all those higher wicks, 1, 2, 3, in 5 days, counting up until yesterday. That shows that there is a lot of selling pressure up here, a lot of selling pressure. I didn't make this line, the market made this line. So, and it's obvious that this is a technical line, but it's obvious that it's important. I'm not saying that it's not going to move higher. If risk-on situation goes on for a little bit more, probably it will. But what I'm saying is that there is a lot of selling pressure up here. How can we take advantage of that? What does that tell us? That tells us two things. A, either it's going to go lower and fast, or it's going to move higher. Okay, what did I tell you now? Absolutely nothing. I actually did, because if it actually moves higher, it tells us that there is a lot of people that have invested in being short up here. So probably a decisive break over this channel is going to trigger a lot of stop losses. I assume that if we break higher from here, the move might actually accelerate to the top side. So keep that in mind. If you're short, the risk reward is obviously there, and we break above there, personally, I wouldn't be short anymore. Just, you know, my 50 cents on this one.
And just so you all know, Steve was not on the webinar with me. And you know, one of the other things I need to point out too is Steve and myself and Stelios and Nicola Duke and Grega, we don't let each other's analysis influence each other. That's one thing that. It's one thing that, yeah, when we put together Forex Analytics, it was important that we, you know, weren't influenced by each other's analysis. Steve jumped on this webinar just before he
I
came
think
on
30
here.
seconds before you went into break, actually.
Yeah. So what's interesting about that, Steve, is that our analysis, we have very similar analysis, but we all come up with the same conclusion. As I said even earlier this morning, I'm like, listen, if the Aussie dollar breaks above 77.50,
yeah, it's gone.
It's gone. I'm gonna drop everything and go long the Aussie pretty much across the board. I mean, it's
same here.
Yeah. Okay. All right.
Same
Good.
here.
Good. Okay.
Okay, let's have a look at one of mine and Stelios' favorites, because we really believe in the strength of the economy. And this is the NOK, the USD NOK in particular. Let's see what the USD NOK has done. Okay, USD NOK has ascended quite abruptly, following, of course, the big price drop of oil. You know, there is obviously this correlation between the NOK and the oil, because the Norwegian economy is based on exporting oil, not as much as people would want to believe. And you know, there are a lot of people that don't know that Norway has already has since many years ago the Norwegian fund, which has like 900 billion assets, which they're trading separately from oil. Actually, the fun part is that they're making a lot of money out of oil. But if I remember right, like last year, they decided that wealth, their fund, the sovereign fund they have, won't invest in companies and technologies that are not environmentally friendly. Obviously, they want to make up, for it, and which means that they have a lot of wealth not correlated with oil, but still the NOK is following oil very closely. That makes sense. What we see here is that we had a huge uptrend, which obviously, with this ascending wedge, got exhausted at some point. So the question is this a corrective move? I would say this is a corrective move. It looks and channels like a corrective move. It found very strong horizontal support, but on the other hand, the rebound from here also looks corrective. So I would say that worst case scenario, this is like an A, B, which means that I expect a C. I was short, and Blake knows that very well, from 840. I considered, as you see it's marked on my chart, I considered 840 to be a very important level. The moment we went below here, I thought that this thing is going to move lower. Obviously, we're trying to make some kind of a rebound from this little triangle. We can see that from the 2 weeks, two long lower weeks we had, and obviously today's candle looks like a continuation. Personally, a retest of 840, I would find it an amazing opportunity to load some more, at least until we hit 8, somewhere here. So that's another thing I had to show. Let's go have a look at some of the metals.
We got about 2 minutes, Steve.
Okay, let's go over silver then instantly. Same situation.
And then silver. Go ahead. Yep.
Huge downtrend. Formed extremely clean from a technical perspective. After this break, sometimes technical analysis is very nice and simple. Break out of this channel, out of this trend line, out of this triangle in a sense, a retest, a perfect retest, and boom, it's gone. Probably this is some kind of fourth wave consolidation. I expect a higher high sooner rather than later. I don't know if it's going to be from here or if it's going to be from here. I'm definitely a buyer again at around 1850. Worst case scenario down here, 1770. I think that if you look at the big picture, this thing has broken off to the upside. My bias is now bullish, and that won't change until we break some very important levels. Okay.
So we'd have to get like maybe below 1750 or something to really.
At least, even 1640 or something. Yeah, to say that, okay, that was obviously like a dead cat bounce on the long term,
Right.
But keep in mind that that's why you also need to have fundamentals in mind. Down here, for example, around $13.50, $14 per ounce. I mean, that kind of an amount doesn't even make, in most cases, for extracting the metal. I mean, that doesn't even pay for extracting the metal. I mean, long term, a market is never going to find an equilibrium down there. Longer term. That doesn't mean that it can't go lower. Of course it can. And it can stay there for more than you can stay solvent. But can silver, let's say, find a long-term equilibrium at 14? Absolutely not. Absolutely not.
All right. Well, Steve, Kip is here, and I'm sorry to cut you off. I just want to say thank you so much for coming on and
it was nice
helping us
being here
today. Yeah.
Good morning, guys. Good morning, Steve.
Hey, Kip. How have you been, mate?
Good, man. Good to hear from you.
Yeah, same ways.
Yeah, it was nice to have Kip. It was nice to have Steve on here because these summer days, at least we got a few ideas about what to do with the Aussie and the Euro pound and maybe some precious metals here. So.
Yeah, always good stuff. Always good to get a different perspective as well.
For sure. Well, Steve, thank you once again for joining us today.
Thank you, everybody, for being here. It was nice being here.
To follow Steve on Twitter, it's Vulgi, VULGI, at Vulgi, and I'll tweet out your credentials here in a minute. And Kip, thank you so much. Everybody, thank you so much. Happy Wednesday to you.
Thank you, Blake. Have a good hump day. We'll see you a little later this